Good afternoon. Well, not such a good afternoon, traders and investors. Welcome to the September 29th, the end of the week, the end of the month, and the end of a quarter. And wow, has it been a wild quarter. You guys have your quotes in front of you. You see what happened? They turned a 30 handle gain into nearly a 30 handle loss. We're now red on the session by 13 handles, 34, 24.50. I think closing anywhere near unchanged would just be a godsend for this market today. Um, the buck rallied off its low. It's only down 11 cents now at 105.81. In fact, it had a substantial rally. Bonds are flat here at 113 and 15 30 seconds. That's one thick monthly red bar candle there. Crude still remaining in the 90 handle, up a buck 50 or down 68 cents at 91.01. Gold farther and farther away from 1900, down $13.50 at 1865.20. Silver, that's in the red. That thing was up. Silver was up in the 23 handle. Silver was at 23.80 and now it's at 22.40. If that's not a reversal, then my name isn't Joel Alcana. Now it's down 33 cents at 24.41. You have Bitcoin futures. Bitcoin futures, they went from green to red. They're down about just under a percentage point. That's $240 at 27,115. We're getting ready to trade the open. Yeah, I listened to Triple D and faded the open. The best thing I could have done was walked away from my desk and not thought about it. But hey, you never know. You never know what the market can do. But here we did. We just dead cat bounce. If I mean, I just don't know any other way to put it, folks. Off the lows for the week. What we'll be keying on next week is that 43.77 level. Just looking at the spider here, the SPY, the monthly, the bottom lower chart. That's the daily. I want to look at the monthly here, and going back for the quarter, we ended June at 44.50.38. Traded up into the 4600 handle. But it's going to be a negative quarter, folks, here, maybe by just less than a couple hundred handles. But we'll see if Ryan Dietrich's mantra from this morning can actually come to fruition. But a lot of things are going to be happening between now and then. What's going to be happening between now and then, October 11th and 12th, is you have some inflation data, and they thought the PCE data was okay, but still a lot of worries about interest rates here on Wall Street. My buddy Rob's going to be joining us in a few moments here. That's Rob McLister. He's from Mortgage Logic. He's a Canadian mortgage expert. He follows the rates for the Toronto Globe and Mail. One of the original traders in the Bright office. I'll see if to see if he can come up with any good stories. But what's up? Let's just talk about some stocks today, some stocks that we had on our radar this morning. And one of those stocks was Nike. We talk about when a stock has a move beyond its expected move. Jay pointed out that they were expecting a 4-point move. Well, it was up $8 or $9 and then gave it away. You look for confluence between that pre-market high. That pre-market high came in at 99.40 during the regular session. Boom, right there, 99.37 open, 99.47 low, and now you're trading up 593. So still a good day for Nike, but well off the highs of the session and really in no man's land here. I don't know. I mean, we've had so many gaps in these markets off earnings. It's always hard to predict if it will come down and fill the gap, but definitely sell the rip in this one. Word to Nike. Drag Foot Locker along for the ride. Foot Locker got a little bit of a pop. Did that open near its high as well? Let's go to Foot Locker here. The monthly, we know what the monthly chart is. That went a little bit beyond the open, so that was a little bit trickier. Let's check out some of your other shoe stocks. That be Skechers. Skechers holding on to some of its gain, but it still has a gap to fill. The Crocs holding on to some of its gains too, but we'll see if it's short lived. That did hit a good level. We talked about $90 in Crocs. Now 90 is even going to have more significance as you hit 90.63 today. Your highs back from earlier in September, 90.36 and 90.70. The thinker is thinking again, is throwing a couple stocks at me here. Micron. Boy, let's take a look at Micron here. Didn't have the great earnings report. I know it was all over the map yesterday. I haven't looked at it the whole day. I do see some tech up. I see Nvidia up. I did see a few other ones. I'll take a guess, and it might be up slightly, but let's take a look at Micron. Oh, up 296. Oh my gosh, I should have looked before I opened my big fat mouth. That's a nice move. Up $3. That's a 4.5%. I just say for you, Micron traders, you are coming in an interesting area at the $69 level. Did we quite there yet? No, 68.73 was your high. Just be aware that 3 of your last 5 highs right there at the $69 level. That is resistance now for Micron. Let's get these other stocks out of the way for the thinker so he can start thinking about his weekend. Planet Fitness having a good day. Didn't check the news on this one. This is just chart couldn't get any uglier, and you got to bounce here. Thinker, if you're still long in it, you should be thinking about the $50 level. The reason you should be thinking about the $50 level is because the current high is 49.60, and then you're going back to September 18th. You had a high at 50.06, so that is taking a look at Planet Fitness. And what else is the roadblocks? Let's see what the roadblocks has for us here. Roadblocks up a buck. See, this is like one of these like mixed days. Like, yeah, I got tech up. I got other stuff down. I had Meta down. Berkshire's actually getting killed today. ExxonMobil, some profit taking in that. But roadblocks, real quick. We'll see if you find a roadblock here in this one at the 29.50 area. I got a series of 3 highs at that area before you broke down to make the low of the move. So X marks the spot there, 29.50 in roadblocks. So let me go to the green room here and see if I have Mr. Robert McLister. He is lurking in the background. A little bit of story about Rob. Rob is a rate watcher and editor at mortgagelogic.news. I don't know about that title. He's also a columnist for the Toronto Globe and Mail. And if interest rates in the markets are not volatile enough, he is the creator of dailyfantasysportshub.com, DFS shub.com. That's where you can find, and we're going to talk. We talked a lot about sports this morning. I'm wearing my Lions shirt. We're going to be talking a little bit more about sports when Rob joins us here momentarily as he's connecting over the internet. Meanwhile, the S&Ps are trying to get back at the 43.30 handle. We are down. We are now trading down 11.75. Rob, how you doing?
What's going on, Joel?
Look what I'm wearing for you.
All right, some camo Lions gear. Can't get better than that.
Yeah, and I always, probably since I was in the 3rd grade, 2nd grade maybe, every day on a Friday before a Michigan game, I wore a Michigan shirt. But with the Lions' victory last night, I had to break out the camouflage Lions. So, but we can get to sports. Yep, we'll get back to sports later. One thing that I didn't put in our prior discussion, or what we were going to talk about today, our listeners, they love hearing stories from the trading floor. And Well, you weren't on an actual, you weren't in the pit, you weren't at the CME or one of the exchanges with me, but you were definitely on a trading floor. And back in the old days when Dennis was cutting his teeth, back at Bright Trading, where we at one point we probably had 25, 30 traders in there. Uh, they like to hear some war stories. Um, do you got one that you would like to share that's PG?
Well, I thought you were going to say something about how after the Twin Towers incident, I was in there buying Exxon Mobil stock. So a story like that doesn't help matters.
I will recap that story. When we were in the office, Rob was one of the traders that had access to Instanet, right? Was it Instanet that you did that on?
I did some ECN way back when.
Yep. And so this is obviously 2001. And once we started to like figure out like, wow, like something's going on here major, Rob, being a quick thinker, said, there could be an oil shortage. And I think you bought 5,000 shares of ExxonMobil. And,
It's like a
and
record for my, yeah.
yep. And he had to sit with that for an entire week because the markets were closed. And I can't remember. I think we had a sympathetic open, didn't we? And then we faltered. Everyone was like, let's save America.
Yep.
Do you remember do you remember how that played out at all or not?
Yeah, there was a short ray of hope, and then I figured out that this brilliant trade wasn't going to pan out as expected. But it just goes to show you, man, the knee-jerk trades aren't always ideal scenarios.
I wonder what Bob thought about you taking that home because you didn't really take shots like that. You were, like to take a lot of base hits and stuff like that. So yeah, I remember you taking those 5,000 shares home and you lived to survive. But we're not here to talk about old stories from the floor and any of the fights that used to break out in the office between the brothers that we won't name. But man, oh man, let's just talk interest rates here. And the first thing I want to ask you is, going back to last week with Powell, did I mean, I know you're following it from the Canadian as well as the US perspective. Did you really feel like you got any new information from him from what he said in his testimony?
No, I think the market already knows as much as Powell knows for the most part. So we're not going to get a lot of, he's data dependent, so is everyone else. And so, you always get these little blurbs that come out and kind of shake up the market, make you scratch your head and make you wonder if you got the right perspective on things. This JP Morgan thing, 7% interest rates, listen, I think that we all have to step back and realize that we don't know where the hell rates are going in the near term. All right. Could we get to 7%? 150 basis points of additional hiking is not impossible. Right. Now, at that point, things start breaking. And I think that, the rates retrace before too long. But this is a similar line of thinking that people had in the late 70s.
So you don't think that 7% call by JP Morgan and Jamie Dimon, you don't think that, like, to me, I'm like, man, if rates are at 7%, man, I'm just going to be hiding under my desk because this market's just going to be totally in the pisser. So you do, if I don't want you, I mean, could you put a probability on that, a possibility? I know you're data dependent too, but 7%, I mean, what would that do to the US debt? What would that do to the consumer? What would that do to student loans? I mean, don't you think the market or the economy is going to break before we get to 7%?
Well, I don't know about 7%. That maybe JP Morgan short up those wazoo, but the fact is that there are things playing out right now that no one expected, especially this late in a rate cycle. So, real-time GDP near 5%. You got another Fed hike in the dots here. You got inflation up a couple months in a row. Oil's going to the moon. You got unemployment still 3.8% versus a 6.2% trend. This is not the type of market that one would expect with a topping rate cycle. So we're not there yet. So we have to kind of be a hell of a lot more patient. And the Fed's going to be talking tough here through the balance of the year and maybe longer.
So, I mean, higher. I've said stable for longer. I haven't, and to me, where the rates are on a relative basis, they're, compared to where they were in the 70s and 80s, they're not high. But I mean, there's the dot plot, there's the pivot. I mean, but first they got to stop going up, which right now perhaps we don't have an end in sight. But what about when will there be a pivot? I mean, does this market have to come crashing down for the Fed to pivot? I mean, what are going to be the catalysts for this? Is it going to be unemployment going to 7? I mean, how long could it take for unemployment to go to 7% or 8%? I mean, where could you see the first ray of hope for rate cuts in the US?
Yeah, I think you need unemployment above 5% for one thing, and we got all this soft landing talk. And I think that's scaring a lot of bond traders, right? They're worried that we're not going to get to where we need to be to tamp down inflation quick enough. They're worried, inflation is going to be higher for longer. That may necessitate higher rates for longer. And keep in mind, we're talking policy rates right now. Okay. There's also the bond market, right? The 10-year yield, which is so critical for so many things linked to that borrowing rate. And, I think personally that the market is underestimated. Bond issuance, massive supply coming. We've all seen, that ugly ass chart that's going straight up to the moon in terms of, government spending and, the debt. And this huge government spending is scaring foreign investors. I think that this fiscal concern, the US downgrade, all of this negativity is hurting bond demand. And, God forbid rates go up, another, 150 basis points or more, that's going to put severe pressure on, the US fiscal situation. And it kind of creates this feedback loop, which is a little worrisome. But hopefully, the biggest factor of all is global economic performance, US economic performance. And so hopefully, that weighs on things like oil prices and demand enough to kind of get rates going the opposite direction before too long.
So what's going on in Canada? I mean, I know that where it's intricately tied in a lot of different ways here, but there's different cycles, there's different lending practices, so to say, in Canada here. Dennis, he is very worried about the people that maybe their loans not up next year or the year after, but 2, 3, 4 years down the line. I mean, the 30-year fix, which we have here, they really don't have those, options in Canada. Well, they talk about amortizing things out farther, like on car loans and stuff. But I mean, do you think Canada's been ahead of the US as far as the inflation and rising rates, or behind?
Well, Canada's got a much more leveraged consumer, and they have. I think they're going to hit recession before the U.S., assuming both countries go into recession. In Canada, we're the tail, the US is the dog. So, we're being wagged. I mean, inflation popped back up from 2.8% to 4% on the back of, oil prices going to the moon and unfavorable comparables. So the inflation picture is not looking so good. We might get another hike before year end. Job growth still high. Immigration's out of control. And I'm sure Dennis has talked about this, record 1.2 million people in 1 year for a country, 40 million people. That's huge, right? Like this is like World War II percentage increase there's just not enough homes to house all these people. And that's fueling inflation as well. We got, like I said, the big wave of renewals coming up 2025, 26. Hopefully rates are lower by then, because if they aren't, people have to, reset their, 1.99% mortgages at, 6, 7%. We're going to have some problems.
We're gonna have some real big problems. I know that you dabbled in the Toronto real estate market back in the late '90s and early 2000s. I mean, is it still? I mean, I know it had the just exponential increase, and it seems like things go up, like gas prices go up and up and up, but then when they turn and come down, they never come down as much. And Toronto's probably the most, populated city in Canada, the most prosperous. How are things looking there in the housing market?
Well, the government housing agency says we're 3.5 million homes short of where we need to be in 2030. And meanwhile, like I just said, we had 1.2 million people,
Wow.
new Canadians in the last year alone. So, and some of those are temporary residents and whatnot, and so those folks add to the rental market demand, which is creating a lot of stress there. There's just not a lot of places you can go in Canada and get, like a reasonable rent or a reasonable mortgage payment relative to your income. And that's going to have, I think, profound economic consequences in time if they don't fix it.
What about, I mean, can you give me a Canadian housing stock to take a look at? I mean, what about the US housing stocks have pulled back, a little bit from their all-time highs. I'm looking at the XHB, and that's not far from it. I mean, is this just these housing stocks, these building stocks? I mean, is this just another bubble ready to pop, or is just unfulfilled demand going to keep these stocks buoyant?
Well, I think that we're seeing right now like a slowdown in starts. We got a record number of homes under construction, but it's just not an ideal time right now for builders to take a lot of risk. It's very different than in the U.S., right? Where it's just a different scenario in the U.S. where people have the 30-year mortgages and they're locked in. They're not selling their homes as much, and the inventory is coming from new construction. A little different in Canada, and so right now we're in the process of adding to that imbalance in the housing market between supply and demand. And so, the market is so unbelievably geared to interest rates up here just because affordability is such a huge factor with everyone so leveraged and home prices so high. So, when everyone's kind of like just hinging on what the Bank of Canada is saying, like, every 6 to 8 weeks or so. And so, I think that when you see those rates, when it looks like we're finally there, right, and the Bank of Canada is going to start pivoting and rates are going to have to start coming down, then you're going to see housing do what it did in the spring and just rocket back up. And so, but that's what we're waiting on right now.
We're on the line with Rob McLister, former Bright trader. He's the rate watcher and editor at mortgagelogic.news, also a columnist for the Toronto Globe and Mail, but he has another side job too. He has founded, back in our day, we founded a sports wagering site. We were only 20 years too early. But tell us about your new venture. You talk about volatility and interest rates. What about volatility in daily fantasy sports?
Well, hey, listen, there's a lot of action in daily fantasy sports. Year over year growth is huge. People love betting. They love, playing these big sports contests where you can make, $1 million for $20 entry. And so, we're kind of just riding that wave a little bit. We got a fun little platform called DFS Hub. We do free contests every week. Joel, I expect to see your lineup in there and not completely full of Lions players.
Or Michigan players. And how can they get a free trial?
Yeah, go to dfshub.com. You sign up for free. You can play in the contest for free, a whopping $100 first prize. So take Rob's money.
And so it's just like every game, every week is what people just like that Thursday night game. Could you take players from each team, the Lions and the Packers, and play it that way?
Yeah, you want me to do a super quick screenshot?
Oh, I love it. I love it here. Go ahead.
Here we go. Let me know when you can see the screen.
Okay. It's coming over the internet.
You see it live?
Boom, 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 boom. Let's see if I see it. It's coming up. It's a black screen. There it is. Go ahead. I'll blow it up on mine so I can see it better. Okay.
So here we go. So what you can do if you want to do a little no-brainer lineup here is you click on your player of choice. You click on this optimize button here. Okay. It fills out a lineup for you. You click on this free contest button and that'll enter your contest right here. Okay. For big prizes, you get a nice email from us congratulating us on your performance. It's just unbelievable.
Okay. All right. I hope everyone checks it out. I know people can't get action in the stock market over the weekend, so they have to do their daily fantasy sports. Before I let you go, I got a specific question here on a Canadian bank, and it's the Bank of Nova Scotia. And I know you're in a precarious position with what you do and writing about mortgage rates and everything. Could you just maybe make one broad comment about the Canadian banks?
Well, Canadian banks are where you want to put your money if you want really reliable dividends, but they're cyclical. So, we're going to see a cycle and we're going to see, probably some weakness in banks here, especially if we get, a housing default cycle, which typically happens when you get near the top of the, the rate hike range. So they're probably going to be a better time to buy the banks, but they're as rock solid as you come. It's not like in the US where you got, like 4,500 plus banks. In Canada, there's 6 banks that dominate like 90% of the business.
You know what? The only thing I discussed this with Dennis. I mean, I thought you'd see more appreciation in Canadian banks because of their exposure to oil, but that really hasn't played out with the oil rally. Could you put your finger on the reason for that?
Well, there's certainly a lot of oil and gas lending and whatnot in business for sure, but it's they're much more diversified than that. So it's more of an economic play, heavily leveraged to the consumer and housing.
Okay, all right, Rob. Thanks for joining us for this update. You've kind of tempered my enthusiasm here for a pause or for rates to stop going up, but you know what? That's market, like be data dependent. Rob McLister joining us here on the closing print. Thanks a lot, Rob. We'll be dialing you up real soon.
Thanks, Joel.
Okay. All right. We are heading into the closing print, and I think that Jay put it here very appropriately. Late day shenanigans here at the end of the quarter. We almost went green on the session. Then we fell another 15 handles here. So just based on the not making any big predictions here with a 1 minute and 15 seconds to go, but not a good day. We gave back a lot of the gains from the session, the majority of the gains. We are closing in the red. It's going to be in the red for the month. It's going to be in the red for the quarter. I know there's a lot of optimism here about what is going to be in Q4. Perhaps even if you tuned into Ryan Dietrich this morning, he gave us some stats, Statman do, where we can't have a rally into the end of the year. But first things first, we need to finish this quarter. We need to finish this session, and it's not going to be the greatest one. I'll try and call the closing printout here for you in the next 30 seconds. I hope everyone has a safe weekend, and I hope your team does as well as my Detroit Lions did. But it's going to look like we're going to go off the board here with about a 13 handle loss, according to my clock. 10, 9, 8, 7, 6, 5. I'll try and catch that last print for you. Could see a little pop, maybe. There you go. Little pop. I'm going to call it 43.27. That's going to put us down about 10 handles. We'll be back with you guys on Monday to give you the information, whatever transpires over the weekend with the government shutdown, which looks like it's going to be happening, and what other macro news events take place over the weekend. We'll be joined by the cow guy, Scott Shalady, 8:05. He likes to get here early so he can do his other show. Joel Elconin signing out here on The Closing Print.